Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what me and John write on a regular basis, you could head to incomeinvestors.com, or you can find the link to the website in the description below. When crude oil prices take a sustained breather, it's always good to keep an eye on diversified energy plays that has also a strong foothold in the natural gas and natural gas liquid space. Right now, US natural gas futures are above $5 per million British thermal units, or MMBUs for short, the highest level since 2002. Natural gas prices are being energized by the cold winter weather and strong exports. In fact, prices are up more than 70% since October. Thanks to these tailwinds, the outlook for natural gas remains robust. One energy stock investors may want to keep on their radar is TXO Partners LP. They're traded on New York Stock Exchange under symbol TXO. It's an oil and gas exploration and production company. So, John, what can you tell us about TXO Partners?
Yeah, thanks, Mo. Fort Worth, Texas-based TXO Partners LP is an oil and gas company focused on conventional oil, natural gas, and natural gas liquid reserves here in North America. Its current acreage position covers approximately 642,000 net acres across three major U.S. basins. That's the Permian Basin of West Texas and New Mexico, the San Juan Basin of New Mexico and Colorado, and the Williston Basin of Montana and North Dakota. With long-lived, low-decline assets, the partnership has identified a rich inventory of development opportunities. This includes resources in excess of 50 million barrels of oil. It also announced two significant acquisitions that have made TXO a much more valuable company. You can read more about it on incomeinvestors.com.
And John, on the numbers front, it reported solid third quarter results.
Yeah, now TXO Partners has been reporting strong revenue over the last number of years, with revenue climbing from $227.3 million in 2021 to a record $380.7 million in 2023. Now, for the year ended December 31st, 2024, revenue slipped to $282.8 million. Now, the lower revenue was a result of lower prices for oil and natural gas, as one would expect. On the plus side, it reported net income of $23.4 million or 65 cents per share, and that's a big improvement over the 2023 net loss of $103.9 million or a loss of $3.44 per share. Now, as you noted, it continues to do well in 2025. Now, for the third quarter ended September 30th, the partnership announced the total revenue increased 67% to $100.8 million, while crude natural gas liquids experienced a modest increase in revenue. Natural gas revenue jumped almost 600% to $27 million. Now, net income jumped to $4.3 million or 8 cents per unit from $203,000 or 1 cent per unit in the third quarter of 2024.
Now, let's talk dividends. I see that it declared a quarterly distribution of 35 cents per unit.
Yeah, now returning value to shareholders is an important part of TXO's business since its January 2023 initial public offering or IPO. TXO has returned over $229 million in cash to shareholders through dividends. Most recently, in November, it paid out a third quarter dividend or distribution of 35 cents per unit or $2.02 per unit on an annual basis for a forward dividend yield of 16.2%.
Now, let's talk about TXO units. They have more than 80% upside potential.
Yeah, no, despite posting solid quarterly and annual results, TXO units have been having a rough go of it lately, currently trading at an all-time low of around $12 per unit. TXO is down 19% year to date and 18% on an annual basis. Now, not much to cheer about. That said, Wall Street is increasingly bullish on TXO units over the longer term, with analysts providing a 12-month share price target range of $19 to $22 per unit. Hitting $22 per unit would actually put TXO units in record territory.
Thank you so much for your insights. TXO Partners LP is a great energy company with growing property portfolio in the Permian, San Juan, and Williston Basin, each characterized by low geographical risk, low decline rates, and high recoveries. For passive income investors, the partnership legally has to distribute all of its cash on hand at the end of each quarter. Management has said that the low decline of its reserves and the relatively low cost of maintenance production, combined with its low leverage profile, will continue to support distributions. All of this should continue to be good news for all shareholders. This includes 24.7% held by insiders and 31.5% held by institutions. Of the 65 institutional holders, three of the biggest ones are King Luther Capital Management, CIBC Private Wealth Group, and Goldman Sachs Group. That's it for today, and make sure to go to incomeinvestors.com now, where you can find the link to the website in the description below. We'll be back with more income picks soon, so stay tuned, and in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.